Bank of Ghana's MPC begins review of economy to guide policy direction, and also US and EU strike trade deal to avoid transatlantic tariff war, and importers and exporters call for urgent reduction in lending rate amid falling inflation. Now let's settle for the details of this story. Importers and exporters are calling on the Finance Minister, Dr. Cassiel Forson, to take immediate action to reduce high lending rate by commercial banks, citing a mismatch between current interest rate and the country's improving macroeconomic indicators. With inflation dropping from 23.8% to 13.7% by the end of June 2025, the trading community argues that the current average lending rate of 27% remains excessively high and is still stifling business growth. The group says the decline in inflation should be reflected in lending rates to support private sector recovery and sustain economic momentum. They are also urging the Bank of Ghana to ensure that commercial banks align interest rates with prevailing economic conditions. The call follows the presentation of the 2025 mid-year budget, which highlighted a notable fiscal improvement. However, traders insist that unless credit becomes more affordable, many businesses, especially in the import and export sectors, will continue to struggle. Away from that, the Monetary Policy Committee of the Bank of Ghana has begun its 125th regular meeting today, Monday, July 28, to assess recent macroeconomic trends and review the country's economic outlook. The three-day session will focus on key indicators such as inflation, exchange rate performance, and the overall health of the financial sector. The meeting follows an earlier emergency session held on July 17, which the committee noted growing confidence in the economy and strengthened external buffers. At its last meeting, the policy rate was held at 28%, reflecting a cautious approach amid lingering inflation concerns. Analysts are closely watching this week's discussion as the outcome may influence future borrowing cost, investment activity, and price stability. The meeting will conclude on Wednesday, July 30, with a press briefing where the committee is expected to announce its decision on the monetary policy rate and outline the bank's stance on current and future economic conditions. Still in business, the government of Ghana has recorded a strong 96.86% oversubscription in its latest Treasury bill auction, with investor demand reaching 15.16 billion Ghana cedis against a target of 7.70 billion Ghana cedis. Data from the Bank of Ghana show that 5.07 billion Ghana cedis was accepted out of 13.43 billion Ghana cedis in bids for the 91-day bill, while the 182-day bill saw 5.72 billion Ghana cedis accepted from 8.71 billion Ghana cedis in bids. The 364-day bill also saw strong interest, with 4.35 billion Ghana cedis accepted out of 5.94 billion Ghana cedis. The auction comes amid falling yields across all short-term tenors. The 91-day yield dropped sharply by 289 basis points to 10.83%. The 182-day yield fell to 13.22%, down from 14.61%, while the 364-day yield declined slightly to 14.30%. The strong demand signals continued investor confidence in government securities, even as returns moderate. In the upcoming auction, the government aims to raise 3.86 billion Ghana cedis. Now, away from that, the United States and the European Union have reached a wide-ranging trade agreement, narrowly avoiding a transatlantic trade war just days ahead of a planned August 1 deadline for steep new tariffs. The deal, finalized during a private meeting between U.S. President Donald Trump and European Commission President Ursula von der Leyen in Scotland, imposes a 15% tariff on most European goods, including automobiles, down from the 27.5% previously in place. Under the agreement, a limited range of goods such as aircraft component, semiconductor equipment, certain chemicals, and agricultural products will be fully exempt from the new tariffs. The EU also committed to purchasing $750 billion worth of U.S. energy and boosting investment in the United States by $600 billion. Officials say the deal, which covers nearly $2 trillion in annual trade, brings stability to transatlantic economic relations and eases tensions that had escalated over months of negotiations. European leaders welcomed the development, noting the deal protects key sectors like Germany's automotive industry from potentially damaging tariffs. While details are still emerging, economic analysts caution that the lack of a formal written agreement raises questions about the long-term enforcement of the deal. President Trump is scheduled to meet UK Prime Minister Keir Starmer on Monday, today, to discuss a separate trade framework before returning to Washington later this week. And to our last local story for the bulletin, Ghana has signed a landmark debt restructuring agreement with France, becoming the first bilateral creditor to formalize a deal under the G20 Common Framework. The agreement gives legal effect to the Memorandum of Understanding reached in June 2024 between Ghana and the Official Creditor Committee, co-chaired by France and China. The deal, which suspends debt service payments to France during Ghana's IMF program, also includes reduced interest rates and extended maturities. It is expected to serve as a catalyst for other creditors to follow suit and help unlock further disbursement from Ghana's $3 billion IMF program. Finance Minister Dr. Kizalato Forson described the agreement as a major milestone in Ghana's debt resolution effort, noting it followed 2 years of technical negotiations and coordination after the country's 2022 external debt default. French and Guinean officials say the agreement frees up fiscal space for investment in critical sectors, including health, education, agriculture, and infrastructure. The Paris Club's Secretary General, William Roos, praised Ghana's negotiating team and described the agreement as a precedent-setting step, citing its full suspension of debt service as a strong incentive for private creditor participation. French Ambassador to Ghana, Jules Armand Anyamboso, said the deal reflects high-level political support from Paris, including direct backing from President Emmanuel Macron due to Ghana's strategic importance in West Africa. You can get more business stories on www.zmultimedia.com. You can also follow us on all the social media platforms, ZFMGH on Instagram, Facebook and X, and Z Multimedia on TikTok and YouTube. I am Samuela Inchi. Thanks for listening.